Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We're here for Monday market moves, what happened last week in the markets, and what we expect for next week. And thank you for allowing me to do work that I find meaningful. Thank you for giving me the most valuable commodity you have, your attention. I promise to do my very best to give you a return on it. Alrighty, smash that like button. Don't hit it, smash it, and get the word out. Hit the algo. And thank you to everyone who does so. We all have that brother-in-law who thinks that GameStop is the answer. That's the guy who needs this more than anyone. Okay, starting out as always with the S&P 500. Okay, we hit a new all-time high. It's basically flat for the week. Where it closed last Friday is where it's at today. But we did get up to a new all-time high. Bias is... I'll say it's going to stay above this 20 moving average around 2230 or so, but my bias is to the upside. Dollar went up about 1/5 of 1% this week. We're above the 200-day moving average right here for the DXY. Had a sharp pullback on Friday. Wouldn't surprise me at all if it touches this back down around 104 or so, and then bounce back to the upside. Yields, 2-year yield is up for the week. 10-year yield is up, but not quite as much. So we have a further yield curve inversion. We're going to get rid of this white line here. Really thought it would hang right around this 200 moving average and gradually start sloping up. Not happening. It broke through that, closed 3 days down below it. Let's take a look on the weekly here, see what that bar looks like. Yeah, interesting. So we might have a further inversion going here. Maybe it'll get caught by this 50-week moving average, but really interesting. So in order to get out of clown world here, we've got to get up above 0%, and the chart's going the wrong way for that, which kind of means higher for longer. Alrighty, 1-month treasury is still paying north of 5%, 5.37%, and TLT is up 1/3 of 1% here. And maybe it'll get scooped up by this 50-day, basically just waiting on the Fed to cut interest rates. Gold fell 3.5%, closed the week at 23.34. Really interesting here. So might be ironing out like a little short-term kind of double bottom here, hitting on the 50-day moving average. Let's see what the weekly looks like. 50 weekly is 2,075. 200 weekly would be around 1,900. So as far as downside, I would imagine it's probably going to bounce off this 50 daily, and we've pretty much seen about all the selling, maybe get down around 2,300. So that'll be our first support. Next support after that, well, for ease of memorization, 22. Dow Jones Industrial Average dropped out, dropped 1,000. Pretty cool. Maybe Peter Greenwich had his short in there. I'm not sure. If you know, put it in the notes below. So Dow to gold, although they both dropped, gold dropped just a little bit. You can see it coming down here. Still looking long term here. You know, when you can trade 1 ounce of gold for 1 share of the Dow Jones Industrial Average, we will be making that trade. All right, CEF, the Sprott Physical Gold and Silver Trust. This one is down 3% for the week. Real easy way to play the physical bet here. Not going to have as much upside as the miners, but this is kind of where you start. Do have some resistance right here, right around where it is now. The next level I'd be looking to enter would be around there. That would kind of land up with the 50-day moving average. So what is that, about 21 bucks, maybe 21.50, somewhere in that ballpark. GDX is down 4.5%. We don't see any patterns for buying right here. It's just starting to break down. If gold rolls over, then this is going to roll over even more. But it's kind of looking like we might have a little bounce here in gold. So I'm thinking, although I don't see any buy points right now, we got a fair amount of resistance kind of around where we are now, maybe around like 36 or so. And GDXJ closed week at 44.60. Same kind of pattern here. You can see, don't see any buys in that, but you know, possibly, you know, if you have no position, just establish something. But the technicals here are pretty stretched. I'd be wanting to wait for further pullback before we get start getting froggy. Franco, Nevada. Okay, we talked about this one last week. We set a limit order around 123. So pretty cool. Got down into the 120s, the high 120s. So if you had that in there, it hit. I think this is going to be a pretty good entry point when we go into the future here. You got the 50 moving average about to cross the 200. The 200 is starting to slope up. Golden cross plus a big reversal bar on that day. I kind of like it. You know, if you, I'm not getting any more. I got a whole bunch back here. But if you don't, if you're new to gold and you don't have any position in the best gold royalty company on the planet, that's a pretty decent entry point, I think. Wheat and precious metals down 1%. Don't really see any entries into this. Just part of the long term. Collect your small dividend that is increasing about 10% each year. So this should do quite well and has done quite well for the gold bull market. Gold Royalty Corporation down 4% for this one. Now we got a an option on this one that doesn't expire for quite a while. I think it was October. Where is it? October? Come on. There it is. October 18th. Let me undo that. There we go. October 18th. Now, this is kind of heading in a little bit of a retracement here. So we got a little bit of a retracement. Limit orders maybe around like 185, somewhere in that range. And then you know, stink bids 175. But I think this one's going to do pretty well. Especially if gold continues the way it is. I love this company. Metallo Royalty down 1%, hitting right around the 200-day moving average. Looks like we're going to get a golden cross. The only thing I don't like about this is the 200 moving average is sloping down. Origin Royalties, this is up 15.8% for the week. Amazing. We got one more order in here after talking with Adrian Day. If you guys didn't see the episode, I'll put a link right up here. If you're curious about Origin Royalties, go to the 35-minute mark. He talks for about 8 or 10 minutes on it. And after that conversation, I went in and bought some more right after the interview and got it at 83 cents. Had a limit order for 88 and it hit at 83 because for a hot minute it got down there. I actually placed 2 limit orders in 2 separate accounts. One hit and one didn't. That's the thing about with small companies. Sometimes they hit and sometimes you don't. All right, Bear Gold down 4.5% for the week. I think a limit order around this 200 moving average around 1625 or so would be a pretty interesting entry point. We talked about the limit order back here that hit. Though you guys could probably see it without me drawing it, short-term little Fibonacci extension right here, and maybe a double bottom right there on the 50 daily, you know, around like 16, I call it pretty much where it is now, basically like 1690, and then another one down in here for 1625. Newmont down 4%. But still looking fantastic. We got a golden cross right here like we do in a lot of the gold miners. And liking this one a lot. Don't see any entry points. Technicals are pretty stretched. Would like to see a retracement back down here, maybe the 200 moving average or at least the 50 before an entry. But yeah, liking Newmont a lot. And Agnico Eagle, our favorite, is just still absolutely killing it. Down just a little bit this week for 3%. Don't see any entries. I mean, you could just kind of follow this 20 moving average, but with downward sloping technicals, I would want to wait for a retracement at least to the 50. And B2 Gold is down 4.5%. Okay, so the limit order down here for 250 hit, limit order down here for 240 did not since we started talking about it, but getting a decent amount of support kind of around where it is now, but it's got to break through that 200 daily moving average before it can really be off to the races. Equinox Gold. Okay, this one's pretty interesting. I drew in a fib right here so you guys can see it. And I think kind of a retracement. Wait for it to come down here to like the 100, possibly the 200. By the time the 200 gets there, you might catch one of these retracement patterns. But those would basically be around $5.21 and $4.92. And G Mining Ventures. Jason says, I've been waiting patiently for over a year for G Mining. It just keeps going up and up. Would you still buy in at this point to have some skin in the game? Well, Jason, yes, I would, and I did today. The $1.55 hit, I got it, and then it proceeded to drop another 3 cents. So the thrifty part of me was a little bummed, but I'm just happy to be in this one. Like Rick says, just get on the train as they acquire Reunion, as they build these projects out. This should be a good longish term for the gold bull market. Rio 2, I almost said Rio Tinto. Rio 2, cup and handle has broken out. We had a little bit of a retracement here as gold sold off a little bit this week. But I think kind of anywhere, maybe this is like our new level of support right here around like 35 cents. Yeah, it's going to be a while before they can't even start construction until, I believe, September of this year, and that's just starting. They're going to have a couple of seasons of building before this thing goes up, so this is definitely for the patient investor. If you guys are liking TradingView, you can try this free for 30 days. There is a link in the pinned comment below. I love this software, and everything you see me doing here with all the indicators and everything is the middle version. So that's the one I got, and I love this company. So if you use the link below, you'll support the show, and try it out for free first. And silver, this is pretty exciting. So we're still above $30. It could hit right down here back to 30. So this is basically our new floor. Hopefully 30 holds. We are pretty stretched in the technicals, and look at this RSI. It's just broken below that 14 simple moving average line in the RSI. Generally indicating a downtrend. That reversal bar there, let me pull it up on the weekly, see what the reversal bar, yeah, that's a pretty bearish looking bar. I don't think the $30 is going to hold, but we will cross our fingers and toes in hopes that it does so. But yeah, we got the next one up here at 34. Hopefully it will obey these two white lines because we said so and trade in this range. Gold to silver ratio. Okay, this is interesting. So got a question from Neil. He says, I have hard assets account, which I believe what he's talking about, hard assets alliance, is where you can basically put currency in there in the form of digits on a screen, and they will you know, kind of buy you into physical gold, silver, platinum, and palladium, whichever ones you want, and whatever ratios you want. Now, they're not doing this for free. You have to pay some storage fees and like that, but it's a real easy way to have some physical position that's not necessarily like PHYS, where you can actually take delivery of these metals if you want and swap them at different times if you want, very easily with a click of a mouse, not going down to your local coin dealer and handing him a bunch of silver coins for a gold one, right? Okay, so he says, I have a hard assets account. I'm trying to figure out what percentage of gold and what percentage of silver I should allocate. It allows me to change the percentage according to the changing ratio of gold and silver. Right now I have it at about 95% gold, but maybe I really don't get how it should work. Okay, Neil, so this is very individual, but judging by your picture, you're longer in the tooth than I am. And I think, you know, generally speaking, if you know, you're towards your retirement years and like that, I think you'd want to have a little bit more of a safer play, like with gold. If you're a little younger, let's say you're in your 20s and you could afford to take a bigger risk, I think the risk reward on platinum right now is incredible. So if I was younger, I'd probably be betting more of that. Older, I would be betting more of gold, and, you know, maybe middle of the road, betting more silver. It just kind of depends on what your risk profile is. There's got to be some, what's the word, fees for transferring. I can't imagine they're doing that for free, but maybe they are. I'm not familiar with them really, and I'm not familiar with the software. But you know, if you want to do like the kindergarten version here, you can just look at this chart, the gold to silver ratio. So when it was way up here around like 89, 90, I would be buying more gold. And when it gets down to here, down in the 60s, maybe like 65 and higher, I'm sorry, reverse that. When it's up here around 90 or so, so in other words, 90 ounces of silver for 1 ounce of gold, I would be buying more silver because silver is relatively cheap there. If we get down here in the, you know, 65 area, you know, this is going back to February 2021, then I would be buying more gold and less silver. But I would kind of use this as a kindergarten way of just judging, like, which should I be buying more of. But as far as what percentage for each guy, you know, that's I really would have to know everyone's situation, and that one's up to you. Okay, thank you for the question. SILJ down 3% for the week. This thing has just been absolutely amazing. I mean, some of these lows back here when we're talking about it, $8, you know, it's just had a run up here of 55%. Incredible in just a few months. Love this one, and it's leveraged to the silver price. Pan American Silver down 3%. The cup and handle played out. So measured upside target is about 28. Just had a little bit of a pullback here. We'll see what silver does. It's kind of leaning towards the downside of silver. This will get whacked if that's, you know, and by whacked, I mean it's going to go down if that happens. But yeah, love this company and all the free, you know, free mines that you have down in Argentina and Escobal over in Guatemala. Like it a lot. SILV is down 7%. So we took a 20% of our original bet off the table. I think that silver has some more to run, so we're going to be holding the rest, and we'll see how this one irons out. And Endeavor Silver down 2% for the week, which kind of surprised me. I thought that it would get hit a little more than that, considering its leverage. But just holding, I mean, this is pretty impressive. I don't see any entries here on the charts. I mean, technicals are way stretched, but yeah, just a real idea of what some of these juniors can do in the leverage. Got to keep in mind the risk you're taking here, but 150% inside of just a couple months, maybe 3 months, pretty cool. All right, and First Majestic Silver down 9% for the week. Don't see any entries here. I'd want to see something dip back down, maybe around the 200 moving average before I would put anything in that. And Hickory wants to know, I'm sorry, who is it? Pitch. Yes, Pitch says, great analysis. Thank you. Flattery will get you everywhere. A look at Fresnillo, please. Okay, so Fresnillo, we got into this one, I think about 3 years ago. Yeah. Okay, so we've been absolutely crushed. I've been crushed by this one so far, getting paid paltry dividends along the way. But silver is actually starting to turn around here, and Fresnillo has had quite the run up in the share price, which is pretty cool from the bottoms there at 35%. Mexican mining district risk, but if gun to my head, I'd probably have a limit order down here around $6.90, something like that. We just got a golden cross right here, but technicals are pretty stretched. If you didn't pick it up down here, I'd be wanting to wait for some kind of consolidation. And Hickory says, Steve, can you look at AYA next week? Bought it right after the Rural Silver Boot Camp. A good move for me. Yes, it is. This was when the Rural Boot Camp was back here in February of 2023. So people, you know, everyone take note the time that it takes for these to play out from when he suggests them in the boot camp. You know, I mean, this is over a year, you know, but look at the returns that have come about on this, 100%. So patience is the game here. And AYA, as far as an entry here, I don't see one. I want to see it kind of come back down. Maybe we'll get lucky and silver will get back down to like 26 and then bounce up. If silver gets down to 26, I think that would be like a great entry point. And Highlander, can we get some comments on Highlander Silver Corp? Okay, so basically 46 million market cap, half of that is available to us retail. Exploration, very risky. Man, not a whole lot of history here, just about 3.5, 4 years. I don't know anything about this company, but I would be looking at limit orders around 75 cents and then down here around 50. That would kind of be what I would thinking. This is going to be very leveraged to the silver price. I mean, this is probably over 100%. What was it back in March? 131% since the lows in March. So pretty incredible, but limit orders only, small market cap. And copper, paging Dr. Copper, down 6% for the week. So we had a heck of a run up above $5. Actually had an intraday high at $5.20. Has since come back down to earth. I don't see any bets on any of these copper miners that I follow. But as far as where is our next floor here in copper, floor isn't the right word, support line, a decent amount where we are now, and then some more around $4.50. COPX down 6%. So copper was down 6%. COPX was down 6%. Some support around where we are now, matching up with these all-time highs. And COPJ down 6%. Some support right around where it is now, 23.80. But I would be wanting it to retrace down a little bit more to capture some more back support back here. If it actually gets down in this range, like around $20, $21, that might be a nice entry point. And Arizona Metals, guess how much that one's down? You guessed it, 4.25%. I really wanted it to be down 6% so I could have 6% in a row, but it didn't want to do so. Okay, this is interesting. We popped up above the 200-day moving average, came down, bounced right on the 50 moving average. Technicals are kind of middle of the road, sloping up. I would guess, man, I mean, the easy answer is we're going to bounce in between 25, this 50 moving average and this 200 moving average until it resolves one way or the other. But I think anybody could see that. So up or down, I'm going to say down simply because we got two bearish bars right here, and this one is closing just below the 50% mark, so biases to the downside. I still think limit orders around $1.50, $1.55. And Tony says, what about Vortex Metals on copper? Okay, this one was interesting. So we thought 46 million was a small market cap. Oh, no, no, no. 4.24 million market cap. Free float, 75% of that is available to us. So like 3 million, you might be able to buy it and you may not be able to sell it. I don't follow this at all. You know, explorers, highly risky. Man, I would simply go by lake rate. I mean, look at the volumes, you know, 1,000 shares volume on a day. That's $100. That's it. So super small market cap. I would look at like a limit order around 8 cents, something like that. And all I'm doing is I'm just kind of bouncing right where all these moving averages are. That's it. Hope that helps, Tony. Uranium up slightly, 91.65 to close the week. Was 91.25 last week. The Sprott Physical Uranium Trust added 300,000 pounds, and we are up to 65.4 million in pounds of uranium. So check this out. We're actually trading at a discount now, a decent one, 6%, not enough to entice me to buy it, but you can get $22.69 worth of uranium, and it only costs you $21.38. 65.4 million pounds, absolutely incredible, up 170% since inception, and I believe it's got room to run. So pretty exciting there. What is interesting here on the technical chart, and I don't know, I hesitated to even draw this, but this is a pattern I see, is it looks like a bear flag. So we got pole going down, trading in this range as it goes up. These typically resolve to the downside. Now, the fundamentals are saying that's not going to happen. Time will tell. We shall see. Lori wanted to know, she says, what does it mean to be in the black? Well, this is in the black, Lori. So buy down here, sell up here, basically means anything that is a profit. Maybe you've heard be in the green, basically means you bought into one of these and you're up. Okay. So she says, wonder when do we trim? Do we wait until we've made 100%? Each one of those, I think, is gonna depend on you, Lori. You know, what questions can you ask yourself? You know, why did you buy it? What You know, was this a trade or was this a long-term one? You know, I can go into one that I got recently that that was a trade, you know, and what I thought would happen happened. It hit the 200-day moving average and I was out. But basically, you know, like what were you looking for, and has something changed in the thesis that would make you want to sell it? So if, in other words, like let's say you're buying into an oil stock and all of a sudden, you know, peace erupts in the Middle East and Russia is no longer sanctioned and all these things happen that like all of a sudden the oil bet doesn't look so great anymore, sell your oil, you know, regardless of what percentage you've made. So anyways, I hope that helped. All right, Cameco. Cameco is up. I'm sorry, it's flat. It was up ever so slightly, but not enough to matter. Flat for the week. Don't see any entries into this. Interesting kind of cup pattern right here. Is that long enough? Yeah. Huh, okay, might have a break to the upside on that one. But support, I would look at right around, I don't know, 47, immediate support around 51, 52. Kazatomprom, flat. Great entry point back here at 38.50. I don't see any entry points right now. I'd like to see this kind of slope over, get closer to these moving averages. Maybe we'll get lucky and it'll touch the 200 again. URA down 30%. Basically support at around $30, resistance up around 30. That's kind of around 32. Actually, it is exactly 32 right now. There is some resistance right where it's at now, and then again up at 34, but support-ish around $30 might make a nice limit order. URNM down 2%. We got some support around $55, which is just a little bit below where it is now. And then I think a great limit order would be around $50. URNJ, no entries that I see here, down 3%. $26 is going to be the main level of support. And then below that would be 24. Uranium, let's see. Oh, URNM divided by uranium. So this is pretty cool. We had a nice little breakout last week and it shot up against this trend line, has retraced a little bit and then closed above that. So will be interesting to see if the miners continue outperforming the metal. I would anticipate that they will. Unless the S&P 500 gets whacked, then it probably won't. Then it probably will not. URNJ divided by URNM. URNJ outperforming, just general trend line up. URNJ divided by the two majors, Kazatomprom and Cameco, general trend up. Look how it's getting approaching this this trend line down here. Might be a good time to start adding to URNJ. URNJ divided by the two majors and the Sprott Physical Uranium Trust, general trend line up and has been so for over a year. So anything kind of down in this range down here, I think is great entry points into the juniors. Uranium Royalty Corporation down 1%, still got some pretty good support around $2.50. I don't see any entries right now, but what's interesting here is we've got sloping RSI up. It's got to cross this 14 SMA. And if we can get above the 200-day moving average, maybe we'll sustain it more than we did this last week. But did shoot up and then shot right back down, just some normal volatility. And energy fuels, the 4U's down 2%. I see a lot of support around $6, which is, yeah, I think that might be a nice limit order. Although looking at the technicals, we might want to see it sell off a little bit more than that. We got a longer dated option on this one. And hopefully we just have a nice run up. That would be ideal for that option. Shocking. Denison Mines up 4%. Okay, this is just such a long ball play. It's basically they are sitting on some of the best grades on the planet, but they're so deep down in there with some new technology to bring it out. Are they going to get it? If they do, this will be a long ball home run. If not, then we're striking out. But we'll see. Oh, and Mike via Instagram was asking about, he said, head and shoulders pattern. And this is the Toronto Stock Exchange for Denison Mines, DML. And basically what he saw is an inverted head and shoulders right here. So there's the shoulder, there's the head, and here's the shoulder and that. And the day he was asking me was basically right here. And so the way you read these things is you basically put in a horizontal line right here. So there's that, there's the touching of the two shoulders. And here's the neckline right here, the second line. And then here's the head right down here on the bottom. And basically the breakout is if it breaks out above this neckline, then that's considered a breakout. Now, look on Monday here. Let me get rid of some of these drawings for you so you can see it a little better. On Monday, it actually broke to the upside. So that is a confirmed breakout. I don't like that the bar right here on, on Tuesday, I don't like that the bar is like bearish looking down, but it is a confirmed breakout. So if you got it, good luck, sir. I think these, at least just running it through my mental computer, I don't know what the answer really is, but I'm just pulling out one from my subconscious. I think it's about 60% of the time that you have a breakout like that, it works out to the upside. Now, a head and shoulders pattern is bearish, but inverse head and shoulders is bullish, and that's what this is. Next gen, what do we got for next gen? Down 3%. Interesting here, there's a few of these that have kind of come up. We got a little bit of a retracement right there. So if you're looking for an entry into next gen, I would be looking at the 61.8% retracement of around $7.50. Global Atomic is down, up, up 4% for the week, just tapping on the 200-day moving average. GVX is flat for the week and just hit right on this 50 moving average. We'll see, bias is kind of to the downside on that one for next week. Crude oil. Okay. Antonio writes in, he says, as always, thanks for the good content. Can we do more on your long-term dividend portfolio? I could use more options for my kids' portfolios. Thank you for the time you put into the channel. Enjoy your weekend. Hope all your remodeling is going smooth. It is. I got 3 new windows in yesterday. That was cool. Double hung and everything. Pretty sweet. Anyways, I appreciate you helping me build wealth for my children. Well, thank you, Antonio. I really appreciate that. And thank you for the donation. Thank you to all else who have donated. This is kind of the dividend portfolio here, Antonio, or at least probably 80% of it is oil companies. I like oil a lot. I don't think it's going anywhere. These companies are just essing dividends, and that's a lot of it. You know, companies like Exxon, companies like Chevron, companies like BP, Blackstone Minerals, you know, these ones that just print dividends, especially for your kids, just roll them over and reinvest the dividends. Some of them you might have to do manually, but keep the juice going, you know, until the narrative in oil changes. I think this is just going to be a little cash machine. So maybe if you guys are interested, I could do an episode exclusively on some of these dividend plays if you want. If you'd like to see that, put it in the comments below. Okay, hope that helps, Antonio. So for oil here, it's fallen below the 200-day moving average, but we are hitting right in a Fibonacci here. I think we have a risk of this actually breaking down. So if we get lucky, we might get down around like 69 to like $68 oil again. Kind of looking like we might have a little bit of a pop next week, but this is how I'm going to play this. We got a cup and handle pattern. So we run the retracement here. Ideally, we don't want to see this handle break below the 38% retracement, which would be right where it is now. If it breaks below the 88.59 level, then that means the cup and handle is kind of off and that pattern hasn't hit. But I am so confident about oil going into the future that this is kind of the way we're playing it. So in this ETF, think of this as everything we bet here and back here combined. If this pattern plays out like this and it gets down to this level, this will be an additional 30% bet. Okay, so let's say you had $100 in this, we're going to bet another 30 to bring the total up to 130 bucks, right? And here's the ratios that I'm going to place them. So placed one bet on Friday right there, got it in at 91.17. So that would be like buying 1 share here, 2 shares there, 3 shares there, and 4 shares there. As long as nothing has changed in the narrative here, we increase the amount of shares that we're buying. And what is, okay, so these percentages right here that I put in, so these are each of the limit orders. Got one that hit, another one here set for 88.65, another one for 86.25, and then the last stink bid that probably won't hit, but maybe you get lucky and it does, 79.75. Okay, now I added up the last 4 dividends here, so 70 cents, 67, 80, and 73, and then got the total dividend amount for the last year. Now you can't, this is an ETF that has a whole bunch of oil companies in it, so the dividend's always going to be changing, but it gives you an idea of what the general payout has been for the last year or so. So if you plug that forward and into these stock prices right here of 91.17, the yield that I captured when I bought this was 3.19%, assuming it continues to go at about that range, right? If there's a better way to do this, I'm all ears. Please put it in the comments below. All right, then the next one here, set for 88.65. If the dividend continues at about the rate it is now, that'll be 3.28%. And then down here on this one, it'll be 3.38. And then down here, it'll be 3.65, right? So as it gets cheaper, we're buying more of them and our dividend yield is going up. Now, when we were buying back here, it was almost 4%. And on top of that, we've had a dividend since then, so that got rolled back into there. And the beauty and the magic of compound interest just runs. Okay. Exxon Mobil, same kind of thing here. I did a couple arrows right here for examples. So let's say we're starting to get a sell-off here in Exxon Mobil, right? The math we do, if it breaks 109, then the cup and handle is played out. So this limit order was set just above that, or breaks down. So 110, if you run 110 at their dividends, so we go to the dividends right here, and it is 3.35% right now, but historically, so these last dividends, they just go up, right? And we're at 95 cents, 95 cents, 95 cents, multiply that times 4, you get $3.80, divide that by 110 share price, and the yield on that is 3.45. Now do that down here for the next limit order for 101, and if you capture it at 101 and their dividends continue to stay the same, possibly even go up, which means this number gets higher, but if it just status quo and they never raise their dividend again, this is the yield you're going to get, which will get compounded in, and the juice keeps running. And you can see the magic of this if you do this for your children. Right? Okay. Chevron, this one I do not have, but I am exceptionally excited right here. So I was looking at this thing back around 140 and I just never pulled the trigger. I just got Exxon, and that's okay. But look at this technical right here coming right down by the 50 moving average. If oil gets sold off a little bit more, this should hit, and pretty good dividends on this one as well, north of 3% in a commodity that is likely to do extremely, extremely well. Blackstone Minerals. Okay, all sorts of new arrows along here. So did 2 more purchases. I'm recording on Friday. Just before the market closed, got in at, what is that, 1560s, somewhere around in there. Probably going to get sold off even more. So just adding on the way down. Next limit order down that is 1525 and then 1501. Sometimes I get miffed because it doesn't quite hit 15 like even numbers, so I put 1501. Okay, so love this one a lot. Dividends are absolutely incredible. They're north of 10%. Now, freehold royalties. Oh, Moose says pronunciation. It's not Canucks, it's Canucks, I believe, if I'm reading the phonetic spelling right. Thank you for that, Moose. I'm assuming you're a Canadian, hence your expertise more than mine. I've been saying that wrong for like 40 years. Okay, a lot of support right around where it is now. Been talking about 1350 for a while. It hit that and actually exceeded it, got down to 1330, 1335. So hopefully your limit order hit, and if it did not, I think anywhere around where it is now, and maybe back here around 1275, 1290. Let's call it 1290. Yeah. Woodside Energy up 1%. The chart has finally reversed on this thing. I mean, this pays incredible dividends, but the stock price just keeps getting hammered. But check this out. You'll remember this from another one. We got some retracement going here. So if we have another comeback down right around like 17, 18, around $18, that would hit in the 61.8% retracement. Hopefully this just continues up because we got an option that expires relatively soon. Petrobras down 1.5% for the week. We had that drop down here, and we had a CEO change. Magda Chambiard, I'm sure I'm butchering that. She just took over as CEO. I read that Prats wanted to do offshore wind farms. I'm not sure how true that is, but I can't imagine that being a good idea. I don't know if that's why he's excused, probably because there's a lot of government involved. I have no idea. If you guys know anything about the CEO change, we had a couple of guys write in. Anthony said, apparently this happens all the time with them. The next president will be the company's 6th in 4 years. So rotating door, kind of like a Zatimprom, I guess. Bill says, previous CEO fought to keep the dividend, and Brazil likes to use Petrobras as a piggy bank for government projects. Investors are worried about the dividend money may be diverted to the government for whims of the president. Currently, it looks like he wants to use the dividends to create jobs instead of doing buybacks and more dividends. So I'm not sure. I mean, almost 60% dividend in 2024 was incredible. They'll, what was it for 2023? I think it was 11 or 12. Okay, so 59.5% for 2022, about 12% for 2023. If it projects on as this, they're guaranteed to pay another dividend, almost 34 cents in September. And the ex-dividend date is June the 12th. So in less than a month, you can lock in, that would be at current share price, a little bit north of, what would that be, 2%. I'm betting on it. I don't know. We'll see. I'm not sure if this is good, bad, indifferent. We'll ask Rick about it. We'll be having him on here soon. And yeah, I kind of like Petrobras. Okay. And natural gas down 5% for the week. Way we're playing that is, don't forget this chart. Wow. Natural gas divided by oil. So historically cheap back here. Now we're finally starting to tick up. In other words, natural gas got more expensive and crude oil got cheap. Devon Energy down 3%. Been kind of expecting this correction, but it's approaching a really neat inflection point. So right down here is the 200 moving average. We're at, what was that, 48.15 to close the week. Interesting entry points around 47. Okay, right around the 200 moving average, right on the 50% retracement. If you want to play in North American natural gas, that one or Equitable, pulled the limit order for $33. That's probably a pipe dream, but I would say any limit orders, I mean, it looks like we're going to iron up for a golden cross here. There is a decent amount of support around, what is that, 38.50 might be a neat starting point if you're looking for this one. And coal is, let's see, thermal coal is closed the week at 143. Met coal closed the week at 240. So this is getting very exciting. The coal ETF, now you'll remember it was back here last week and just shot up. This last week it was worth 7.3 million under assets, and now it's worth 7.5 million under assets. So we had 200K come into this thing and it shot up quite a bit. Moved my limit order up to, what did I move it up to? $23.60. I think we may just have a general gradual incline of this up until we get out of shoulder season. So this is pretty exciting. It's ironing out. Didn't get quite as much. I mean, you know, now that I could see the future, I would have bought a lot more back here, but still do want to kind of time our entries and buy on pullbacks and hope that more and more funds start buying this one up. Okay, Glencore is down 2.5% for the week. Dividends are going to suffer. But, you know, with that recent tech deal, I think this is just an absolute no-brainer. Super excited for that. But in the meantime, you're only going to get 11 cents every quarter per share. AMR up 7.5% for last week. Moved the limit orders up. So originally we started at 265, then we went to 275. Now we're at 290 right now for the last and final installment of AMR. Hopefully we get there. I think we will. I think that if nothing else, I think we'll get down around 296. I really believe this will come back down and touch the 200 moving average, hoping it blows through that just like it did right here for us. Just a little quick touch and go, and then off to the races. As far as Matt Warder's concerned, he believes that this will be trading in the 375 to 410 range come out of this shoulder season. Warrior Met Coal pulled the limit orders on that, kind of waiting for some consolidation here. Just never, well, we did get an entry point on that. We got one right here, that day right there. That would be May 15th, Wednesday. It was a Wednesday, everybody. That would have been our entry point right there. We'll see how this works out. I would say anywhere kind of along this 50 moving average would be a nice entry, maybe around 63 bucks. And Peabody, BTU up 4.6% last week. Okay, we had a limit order down here for $21. We pulled that, so I can delete this now that I've said it. Got some in here for the long-term portfolio. These may end up being trades. Had an option right here on this one, and it I was on the phone with my trading partner, Eric, and I was talking about this one. In the morning when I woke up this morning, Friday morning, I set an order that I didn't think had any chance of hitting, but maybe 5 or 10%. And then I got on the phone with him, and we were talking, and we're talking about coal, we're talking about Peabody for probably 30 minutes. Anyways, he finally convinced me to hang on to this thing, because I was basically looking at this. This is the one I was talking about, Lori, where I was like, okay, I'm buying this. I believe technically that this is going to run up to, $24 and hit the 200 moving average. And we darn near got there. I mean, pretty darn close. And anyhow, in the time in the conversation that he'd convinced me to keep this thing and let it run, because this didn't expire until October, it had sold. So decision made. Came out with 42%. Yeah, kind of wishing I'd have held on to that. The options right now weren't looking too great, but it looked amazing from what I had. Okay, and Bitcoin. Now, this is really interesting. It looks like we've broken out of this bull flag. So we were talking about this last week, and finally popped to the upside. So, without knowing too much fundamentally about Bitcoin here, I think that's a breakout. And I think it'll be very interesting to see what happens in the coming weeks with this, because we've just been trading in this flag pattern, generally going down, and finally broke to the upside on it. Bitcoin's at 68,000. And platinum closed above 1,000, but down 5% for the week. So closed the week at 1,038. We got support kind of around where it is now, around 1,000. And then we got more support down around 925. PPLT, the easiest liquid way to play that, the Aberdeen Physical Platinum Trust. I still really like limit orders around 85 and stink bids around 80. I think that's a neat entry point, and I think it's likely that it'll get hit. I think the only certainty with this market is there is going to be increased volatility. Platinum divided by gold, amazing chart ratio. Just waiting for this thing to get back up to 2-to-1 ratio. We're at 0.445 to 1 right now. Palladium closed the week at $970, so below that $1,000 mark. Limit orders, start making entries around 900. I kind of like, 950, and then again around 900, 850 in that ballpark. You could play PALL, easy liquid way to play it, a limit order around 85. And SPPP kind of coming into an interesting retracement here. Okay, so we're talking about this around 950. If you made any trades, probably time to take profits up there. And now we're starting to consolidate back down. The retracement would hit And this is what I kind of like about this one. Unfortunately, the technicals are a little stretched here, but if it were to come down and hit this 200 moving average or get down to the 50 around $9.85, that would create an interesting entry point. And Centurion says Sibanye-Stillwater has a sizable precious platinum group metals permitted mine in the US. Why does nobody ever talk about it? I think generally speaking, it's because the South African ones all combined and producing and everything make up much more of this stock than that one. So as far as an entry point here, man, I don't know. I got out of this when I realized the risk in South Africa, and it looks like it might be putting in a bottoming pattern though. But I mean, there is huge political risk in this one just from jurisdiction. But this is kind of like what bottoming patterns usually look like, is like kind of around where it is now. So as far as an entry point, if you wanted to get into this thing, compelling entry point, you know, around $5 or so, kind of around that 50, around the 200, just all these moving averages supplying support. You know, I think ideally for an entry point here, we want to see this just grind sideways into like, you know, a dead heartbeat and then capture those moving averages underneath it. But, you know, gun to my head, I would say $5 would be an interesting entry point. All right, nickel down. Well, NIKL is down 2% for the week. We'll see if the riots get worked out in the French, for the French in New Caledonia. So we had a third biggest nickel miner on the planet, and they're having riots there. So, you know, less nickel output is causing the price to jump. So had a limit order hit for 1375 a few weeks back. Still have our limit orders for 1325 and for 1260. Honestly, I think they're going to hit. Iron ore holding flat at 117, has been there for a couple of weeks. And BHP is down 3%. Interesting entry points back here for long-term portfolio. We wanted to play an option on it, but it was just too expensive. It looks like it would have worked out. But sometimes the price isn't worth what it costs to do it. Had a double bottom here. So it gapped up right there. Usually these gaps get filled, but interesting entry point there on Thursday. I think that gap will get filled and we might get an opportunity down here around 57.70, which would hit the 61.8% retracement. Rio Tinto down 2.5% for the week. Still have our pipe dream limit orders in down here for what was it? I think it was 60 and 58.50. I think we're going to need some killer dividend to get that thing wiped out down to that point, but maybe we'll get it, hopefully. Don't see any entry points right now. We want to get it down to these moving averages in like 66 or so, but do have a golden cross. And Eric says, hi, Steve, what do you think about Ternium, TX? I'm not sure if I'm pronouncing that right. Good financials, excellent dividend. Okay, I like their cash flowing. They're not diluting shares. I would be slightly concerned if they can continue these dividends. So, you know, they're paying a lot out, and as far as, you know, what the dividends are worth. So I would be a little bit concerned about that. But as far as technical entries here, I would see around this 200 moving average, maybe around $40, and then a, yeah, $40 around there, and then maybe again around 37.50 and a stink bid for like 35. Okay, hope that helps, Eric. And Alphamin, so the tin play has started to sell off quite a bit. I think last week we said a limit order around 80 cents. That would have hit the next limit order down here around 75, and the stink bid around 69. Okay, so Nestle, I don't have any of this. I'm not really interested in it, but after talking with Adrian and how he was able to get Nestle at the price he did, is he overlaid, or basically paid attention to, cocoa futures, and then he also paid attention to coffee futures. So coffee is the blue line, cocoa is the orange line. And what he was looking at is when these two, which are big products of Nestle, as these spiked in price, the earnings of Nestle went down because what they require to make their products, the price is going up, so their earnings are going to go down. He said that creates a neat little moment in time where you can capture the company for a relatively cheap share price when it's extremely likely that the commodity is going to recover and get cheaper. And you look, and when he was buying this down around in this range, right, it was relatively cheap. And then as cocoa and coffee got cheaper, then the price of the shares of Nestle went up. So we might be hitting another little arbitrage like that right now as the price of cocoa and coffee go up and the price of Nestle shares go down. So if you're looking to play an arbitrage like that, like Adrian did, I'm not going to get this, but I saw this opportunity, so I figured I'd put it out to the hive. Maybe you guys already have Nestle and haven't really paid attention to it, just been collecting the dividends. This could be a very interesting entry point and one that I would like to track. So right in there, kind of right around where it is now, maybe $100 a share, 101, whatever market order. All righty, well, I hope you guys got something out of that. Upcoming guests, we've got David Skrika. He's the one that called Endeavor Silver, and it's had a heck of a run up since silver's run up. Any questions for him? There'll be a submit the questions for David Skrika under the community tab on YouTube. So thank you for tuning in. If you enjoyed this episode and want to support the show and future content like this, there's a link in the notes below. Try out TradingView for free. There's a link in the pinned comment below. And thank you for tuning in. Hit the like and subscribe. And share this with anyone that you think needs to hear it. It's probably your buddy that can't stop talking about tech stocks. You have yourself a great rest of the day, and we will talk to you next time.